It's a moment of truth for Musk. No one, including ourselves, expected he'd be this involved in Doge, this involved in Trump administration, and it's really cascaded, and I think this is a pivotal moment for him.
All right, so Tesla is back to pre-election pricing. Ron Barron, the Tesla bull, is not going to sell a single share. And yesterday, Cathie Wood bought about 69,000 shares for her funds. The question now is, what's next for Tesla, and what did we just hear announced? Well, multiple things we just heard. The first that I'd like to hit is that at the delivery of Donald Trump's new Tesla, we saw Elon Musk announce a potential doubling of production for Tesla vehicles over the next 2 years. This is quite interesting because we, at the moment at least, feel like we might be slightly demand limited and might not need more than the production that we already have, which sits at a capacity of essentially matched with demand. Our demand seems to be about 1.8 million vehicles per year nationwide or globally, and our production is right around 2 million. It's likely that Elon Musk is referring to the robo-cab, though, and optimism that the robo-taxi will sell substantially as they expand the manufacturing for the robo-taxi, not just in the Austin Gigafactory, but potentially also open up a new location within the United States. Now, that does create some potential unionization and cost issues that I want to talk about. But first, let's listen to Elon Musk actually say it.
I have an announcement to make, but I think it'd be helpful.
You mentioned the Ontario...
I want to say, as a function of the great policies of President Trump and his administration, and as an act of faith in America, Tesla is going to double vehicle output in the United States within the next 2 years. Double.
Big deal. By the way, he makes one car. This one I don't understand. This one I don't want, but that's okay. Without a steering wheel, it comes out next year, right?
Yes.
Explain that, please.
Yes. Well, the Cybercab starts production in Texas next year, and it's self-driving. We have so much confidence in the self-driving nature of it that it will actually not have a steering wheel. It will not have pedals. It'll either self-drive or not drive at all, but it'll self-drive.
President Trump, and I'm going to pass on that.
Okay, I like that as a joke. Self-drive or not drive at all. Now, a few things that we want to detach from that. First of all, that does sound like a little bit of a delay. We were originally told that the Cybercab was going to begin production in 2025. This is now being delayed to 2026. Now, we understand that they have test models, obviously, that are produced this year, but the original understanding was that we would slowly start production in 2025, ramp production in 2026, and be mass producing in 2027. It appears now that the start of production is actually likely getting pushed to 2026, but that's okay. I mean, you kind of come to expect this. It's Elon time, right? So, but another thing to consider here is when Elon Musk suggests this development in Austin, Texas, we have to remember that we're paying Texas labor, and guess who's actually clamoring for more tariffs against Canada and Mexico? It's the UAW. Now, this actually makes sense. Unions are historically pro-protectionist policies because that's exactly what tariffs do. Tariffs incentivize domestic production, and that means more jobs for American workers. Now, those are higher wage jobs, and therefore higher costs are associated with that. But it's true, you do create those higher wage jobs domestically, which is exactly what increases the potential strength for unions. More union workers, potentially, means more potential union due members and a more powerful union. It wouldn't surprise me that doubling down of production in the United States versus potentially the gig in Mexico that had previously been considered before the Trump administration became a potential new reality would not only increase certain costs for manufacturing these vehicles at Tesla, but also potentially increase Tesla's risks against unionization. We know that Elon's not a big fan of unionization. That said, the unions are going to have to compete with Elon and Optimus. See, Optimus could be that sort of balancing force that gives Tesla some leverage over, hey, look, we want workers to have jobs, but we're also going to be shifting more to Optimus over here. So I expect some balancing acts to be, coming down the pike in that front. Another thing that comes out of what Elon just said is it will either not drive or it will be fully self-driving. This, again, doubles down on the premise that there will not be more affordable new models. This has been a big debate in the Tesla community. Everybody's been waiting for like the Model 2, right? We've been waiting for that for years. And Elon Musk really put that rumor to rest by saying there won't be a $25,000 car that's not fully self-driving because the future is fully self-driving. So why create something as an intermediate? To this, obviously, people have suggested, got it, so a $25,000 car is not economically viable, which is a logical conclusion. And to this, then there have been suggestions that, well, maybe they'll come out with smaller battery packs for other vehicles, but that was then flipped on mostly because of the realization that a lot of the margin, the profit margin in Teslas, comes from actually selling you the battery pack at a premium, especially as lithium costs are falling. That also said, we do have a little bit of an indication that there are demand problems. One potential indicator of that could be the fact that Donald Trump is holding up a notepad. All cars have self-driving, just needs to be turned on. Teslas can be purchased as low as $299 a month or $35,000. It's almost like a paid sponsorship with the President of the United States. But then again, many will say Elon did pay quite a bit to get to where he is. And so maybe he deserves the shout out. But anyway, we know we've got 0% API, limited time only apparently, for the Model 3. But something else I'm noticing here is inventory Model Y is now available at reduced pricing. Now, this is obviously very likely to be the older Model Y, not the Juniper update. But what you're finding is the new Teslas long-range rear-wheel drive models are selling for $44,900. You've got, here's the new Model Y, the updated version. Here's the updated version at $60,000. That's your entry price for the updated version. One way you could identify it, by the way, is look for the light bar. It's very much the Cybertruck style light bar. And you can see the old model right here. So the cheapest version of the old model is at $44,900 level. But if you go to that reduced pricing section, you get these tabs right here. And you can actually see some of these have about a $3,600 price adjustment to them. So you could see a basic rear wheel Model Y without full self-driving. It's going for about $41,390 right now, which seems basically the same as this one right here. There's essentially no difference that we could see in this, with the exception of the price, and that one is already built and one is not. Now, I find this very interesting because, to me, these aren't even demo models. Seeing a price reduction on inventory of somewhere around, what was that, $3,000, $4,000, 10%, $3,600. Let's do that. It's about 8%, eh? About 8%. Let's do the math here. 3,600 divided by, and then off of the original price of $44,900. That is a price reduction of about 8%. It does suggest that there is a limit to the amount of demand we could actually hope that Teslas have, at least with current models. Now, is it possible that we end up getting some, more refreshes, like Model S and X refreshes? Of course. And who knows? Maybe those will increase some pricing power here. But this idea of manufacturing 2 million more vehicles over the next 2 years, it cannot come from the traditional vehicles, at least not at this current pricing structure. It's not likely going to come with smaller battery packs. So Elon Musk is likely assuming that we could manufacture somewhere around 2.3 million Cybercabs per year within the next 2 years. And that does align with his mass production ramp thesis of 2027. 2 years from now is 2027, and that's when he thinks he could be mass producing Cybercabs. Now, of course, we still have to prove that the Cybercab can be 100% full self-driving. And that is exactly what Morgan Stanley says is really the next catalyst for Tesla. In fact, Morgan Stanley put together this report right here, and they say that according to their valuation, Tesla is selling at a pretty big discount at only 19 times on a PE ratio basis for 2030, based on their 2030 estimates. Now, I personally think that when we start getting companies that are predicting stock prices 5 years out, as opposed to talking about what the valuations are today, and then assuming, some kind of growth rate over the next few years, so we have a metric to watch it, Usually when we get these 5 to 10 year price horizons, we just get disappointed. I hate to say it, and I'm not trying to sound like a bear, just saying it's not my version of doing analysis. I like to say, where are we right now? How much can we grow to next year? And can we grow again the year after that? Yesterday we did that math, so I'm not going to rehash all of that math and the valuation. We covered that math yesterday, and I encourage you to watch it on the channel. However, it's worth mentioning that if we can get to 2 million cybercabs and full self-driving, it would make Tesla look like a bargain today. That would be fantastic. So if you think that what Elon Musk just announced is possible, then you might want to discount how much that might be worth to you. In fact, what we could do is we could update a little bit of the valuation that we had yesterday and just assume some of those numbers. And you could see some of the other numbers yesterday and today's, PE ratios and that. But let's just go right in 4 million vehicles for the end of 27. So we'll go to the end of 2027. We'll do 4 million vehicles. I'll pull this up in a second. We'll go with margin. I don't think the Cybercab margin is going to be that great, so I'm going to leave it at the same level that margins currently are. So I don't think you're going to get a margin improvement because I think they're going to sell them for a lower price, right? Even if they are able to be manufactured at a lower cost, I think you'll sell them at a lower price. So you probably keep consistent margin ratios. And if we produce 4 million cars and value Tesla as a manufacturer, well, that would bring us to a valuation of about $301 by the end of 27, which is about, 2.5-ish years out. Now, if we had a full self-driving fleet and we valued it as a service company, sure, then maybe we could get back into the 400s where we were in December. But, look, everybody looked at those numbers in December and we're like, wait a minute, this has gotten a little ahead of itself. But Morgan Stanley actually has a really good line for this, and I kind of agree with them, that Tesla's stock price tends to really affect sentiment for the company. Look at this. I completely agree with this. Having covered Tesla for nearly 15 years, we find that the investor narrative around the company tends to follow the share price. In December, when the stock was testing $500 a share, the prevailing sentiment was that the company is an AI winner with untapped exposure to embodied AI expressions such as humanoid robotics. Today, with the stock down 50%, our investor conversations are focused on management distractions, brand degradation, and a loss of auto sales. Quite interesting for them to say that because even Dan Ives just talked about how Elon needs to stop being distracted with Doge, basically, and double down on Tesla. And that's Dan Ives, who's obviously a Tesla Uber bull.
It's a moment of truth for Musk. No one, including ourselves, expected he'd be this involved in Doge, this involved in Trump administration, and it's really cascaded, and I think this is a pivotal moment for him. $2 trillion. I believe when it comes to physical AI, autonomous robotics, they're actually the best positioned company in the world. But with that said, to hear Musk continue to talk, and again on social media as well, it's really us trying to explain, like, look, this is the time, very similar as we saw during Twitter, very similar as we saw even called a year and a half ago. This is the time to lead. It's a time to be CEO because I think patience is wearing thin among investors, and it was really to communicate those thoughts at, I think, a pivotal time for the stock.
Now, with all of that said, what's my take? Well, I personally think that it would be a lot cheaper if we could manufacture in Mexico and not have a trade war. That said, I'm not optimistic that we can manufacture 2 million more cars unless we're convinced that Tesla can actually solve full self-driving. I'm not sure that we're there yet. We know that cybercabs are expected to have the sort of hardware 5 version of technology. We expect that most of the hardware 3 vehicles are going to have to get upgraded. Hardware 4 vehicles like the Cybertruck right now, they're pretty good, but they're not all the way there, especially dealing with those edge cases, the predictive edge cases. It's a problematic issue, but we'll get there. But by 26-7, if we haven't gone into a recession, remember, we not only have the upshot of the Cybercab, but we also have the Cybertruck production that's an upshot. So this is a lot of American production. So there's definitely real hope on the horizon. And it could make you bullish as long as you're optimistic in FSD. And excuse me, Elon mentions it himself. If you don't believe in Tesla's ability to solve autonomy, don't buy the stock. So I think that's actually sort of a fair disclaimer there. But again, you're going to face UAW risks with more U.S. manufacturing over time, especially as Optimus production scales up, although that'll be an offsetter, so we've talked about that. But again, as far as demand, these price cuts that we're seeing are slightly problematic. And again, it is on older inventory. People might want the launch edition, but you can't get the launch edition unless you're willing to pay $60,000 versus $45,000. That's a whole chunk more. It's 33% more, right? So with all of that said together, I think when you look at Tesla today, you really can't say anything about the stock until you have more certainty on FSD. Until then, what you're really going to be stuck with is evaluating, all right, what is the economy going to do? Trump classifying Tesla vandalism as domestic terrorism, that's great. It's a pat on the back to Elon. But you really have to ask yourself, is the economy going to come out of this sort of tariff hiccup stronger? Then you've got to, and is Tesla going to solve autonomy? Then you want to buy Tesla all day long, right? So think about that. Short-term trade war, government shutdown catalyst, no recession, and Tesla solves economy, Tesla's probably a fantastic buy right now. If you question how quickly Elon's going to be able to solve autonomy, that maybe he will at some point in the future, but it might take years longer, you probably don't want to buy Tesla right now. Probably have more negative catalysts as they miss that cybercab deadline in August, which Morgan Stanley talks about as well, with their $800 price target in the future. If you think that we're going to go through a recession, probably also going to take a big hit on some of the production numbers and capital expenditures that you're going to see from companies and investments, and you'll probably see a slowdown on this anyway. Even Morgan Stanley tells you delivery data has been below expectations this year, especially with an aging lineup and buyers, basically striking the brand from, the negativity that's circulating in the mainstream media and on social media. Something to keep an eye. That said, they think that Tesla could get to, it's actually $800 within the next 12 months. Sorry about that. Within the next 12 months. That's pretty incredible. The reason I think that is because of the pull forward of autonomous vehicles. Now, they, as a way of citing, their evidence is an AI humanoid day demonstrating the latest capabilities of Tesla's Optimus is expected before year end, and the release of the robotaxi, the unveiling. They think those two catalysts will shoot the stock up to $800. So if you believe Morgan Stanley that they're going to do well at both of these potential events, then hey, this might be another buying opportunity for you on Tesla. Anyway, hopefully you found this helpful, and we'll see you in the next one. Goodbye and good luck.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.